Well, good afternoon, traders. We're going into the new week. We're trying to understand the event risk, the landmines, the risks to our portfolio, the risk to our positions, and there's plenty there for everyone to see. You know, we've seen big range expansion and volatility in the S&P, the NASDAQ, and US equity markets, as we have been seeing for a while in European markets and certainly in Asian markets as well. And whether that continues is another thing. I believe that we probably will see that playing through. You know, earnings season continues to roll on in the US. We've seen about 45% of the earnings season played out so far. Earnings have been pretty good for Q3. You know, the level of beats on EPS numbers are in line, if not slightly above the longer term average. But the outlook so far hasn't been wholly inspirational, and that's really added to the idea that perhaps we've seen peak earnings growth when you adjust for the tax cuts that came through and the sugar hit that's played in there. I think as we go through the new week, we'll be watching to see whether the S&P can push back above 2710, which was the 11th of October low. It's looking at this stage like we're going to close below the 55-week moving average, which is to find the trend higher for a long period of time. That's definitely something we need to do. There's still a lot of technical work that needs to play through before we can say we've categorically seen a low in these markets. Doesn't seem like that's the case, and you know, we're still that higher volatility means that you could see a 2% swing in either direction at any given time. So you've got to take your time frame down into sort of hourly charts. As we go through the new week, we're looking at some of these key levels in FX markets as well. Certainly the US dollar looks like it's breaking higher as the dollar index. We're testing those, or we're looking to test those August highs in the dollar index. And I think the key MacDaddy release is going to be on Friday. We've got the ISM manufacturing numbers there, and we're expecting a pretty healthy number, just above 58 on that index there. And that showed a bit of deterioration last month, so people will be focused on that quite closely because the global PMI series has been quite weak recently, or certainly on a weakening path. That's definitely going to get a lot of conjecture, but it will probably be overshadowed by the non-farm payrolls number on Friday, which, whilst the job creation is expected to be 189,000 jobs, it's the wage data that's really going to get the market talking, because people are expecting that to be at 3.1%, which is actually the highest level since May 2009. Okay, a lot of that is going to be down to base effects, but certainly the fact that we're getting wage growth trending higher with a lot of these other wage data points trending higher could see US fixed income sold off and yields moving higher relative to German bunds, UK gilts and Australian treasuries, which again could reinforce the idea that the US dollar is marching higher. We're also going to keep our eye firmly on what's happening in dollar CNH. That's trading in a new cycle high here and certainly looking pretty strong, although we are seeing signs of divergence playing through. Again, you know, the non-farm payrolls number or the wage data is going to be really key there. But midweek in China, you are going to see the manufacturing numbers playing through. The market's looking for that index at 50.8. Also the service data coming through at exactly the same time. Now, I think usually that hasn't really been too much of an influence on markets, but because people are quite concerned about a desynchronization of global growth again, we're back to that point. And, you know, you are seeing a situation where a below consensus reading could see assets coming under pressure, and people will be saying, oh, there's a slowdown in Chinese growth again. So definitely watching to see if the manufacturing numbers come out well below 50.8. One suspects they'd probably be fairly in line though. Here in Australia, there's a lot to contend with. We're definitely focused midweek. Wednesday, we get the CPI numbers. The market's looking for 2% headline. They're looking for 50 basis points on the quarter. Now, you know, you can probably make a playbook around that, but you'd also include the trim mean number, which the market's looking for 1.9%. So, yeah, that's probably not really going to spur too much volatility unless we get a big beat or a big miss either side. But Aussie dollar at the moment looks like it wants to, looks like I want to sell that into around 71.20, 71.50, into that range there. That's been the high probability sell zone. Failing that, if we obviously get some weak data from Australia there, then you'd be looking to sell on a close below the year-to-date low of 70.4. So definitely one to focus on there, where we can see a bear extension of this trend that we've been seeing since January. That CPI number will definitely be focused on, as we will do some of these housing metrics. You know, we've got private sector credit, which is a really interesting point. The market's looking for 4.5% there, but I don't expect that necessarily to be a game changer. What will get more attention is not just the auction clearance rates over the weekends again, but also what happens with the home price data. Midweek, we get the house price data. In September, that was down 60 basis points. So while there's no consensus to this point, you know, if we do see a deterioration in house prices in that data, then of course, you know, people will show greater concern, and the Australian dollar will probably come under pressure. The Australian banking sector will probably come under pressure again as well, and that's been trending lower. And certainly a lot to focus on there, as we are see in the UK, where cable is continuing to look really weak at the moment. I I've been a big fan of selling sterling yen. I continue to like that on rallies. And certainly, you know, we're looking at the budget. Whether that can get voted through is obviously, you know, something we'll be focused on. Whether the DUP party will vote that through is one thing. But actually, how much credence is there behind a budget that really no one can actually understand when, you know, we don't actually know what the future of the UK is going to look like in this Brexit scenario anyway. So certainly the figures they're going to be using and what they're going to be using them for is obviously yet to be seen. But whether it actually makes it past the desk is obviously something we'll be focused on, because governments don't tend to last in the UK if a budget's not voted on. So definitely something we'll be focused on there, with sterling looking pretty weak at this point.